Hey everybody, this is Paul doing a quick DoorDash video. Today is the 30th, end of the month, and end of the quarter actually. And just doing a quick video on just how the portfolio has done in the last 15 days and some quick thoughts on the market, and all that good stuff. So, I guess as it stands right now, let's go over so the market is still actively trading. So you will see these numbers moving around. So let's go over the current, I guess, as of maybe like this minute performance for the month. So right there. So this month, doing pretty good, as you can see. This is probably going to end up, if this ends up this strong today, probably end up being my strongest month of the year um, so far. I mean, 7% in a month. And then, even in a month where it was up a large part because like this probably should have been negative, but I put 3,000 in for my tax return, for example. So, this month has been basically this bit of money right here that you see, about $1,300, and then just straight up market returns. So, what happened? Um, what's going on here? Why is this month so crazy? Well, at the end of May, as you can see, I was only up 0.71%. So if we scroll in, we go into my portfolio here, and then we go over here. Basically, what happened is my portfolio has a very small exposure to tech. It always has had, because I don't understand tech enough. I just don't do growth narratives. I do PEs and things that are fairly valued, that type of stuff. I prefer safety. So whenever it comes to tech, I've often avoided having very large exposure to it. So as you can obviously see, this right here alone. So right up until about there, I was actually outperforming, or I was actually keeping up. Doing pretty good. And then I started trading flat as tech took off to the moon with the whole AI narrative, that kind of stuff. Just first into I guess the earnings recession, first out of the earnings recession type thing going on there. But pick your narrative. But so this is what year to date has looked like for me. So I have missed a very large run up. Now here's the thing. That's in 7 stocks. And Apple just passed $3 trillion today. So what I'll say about the whole tech thing is basically the market, especially for Apple, likes to sell off a pretty significant amount whenever they hit these big numbers. And I think Bloomberg's been talking about it all day, is that every time they hit 1 trillion, 500 billion, 2 trillion, that kind of thing, they tend to correct by 25%. And then what happens is Apple comes in and does multiple $100 billion buybacks, and then the stock recorrects back up. So, if you're an Apple fan, you kind of know the trend by now. Um, you know, do I think their earnings support that $3 trillion multiple? No, I don't think their earnings support that. That's ridiculous. They have, you know, but Apple Bulls will be Apple Bills. So I don't even try to short it. I don't go near it, that kind of thing. So I guess let's look at so what happened basically, I guess, is I have exposure to everything else around tech. And what they say in the market is the generals lead and then the pawns follow. So what you're looking for in I guess, new bull market or some type of bull market, no matter how long this lasts, because it's in a technical bull market, is you're looking for the rally to expand out. And that is exactly what has happened. The rally has expanded outside of those 7 stocks. That's exactly what's happening this month. So those stocks, the big 7, have barely moved this month. They've moved a little bit, but not as much as they did in May, certainly. So everything around them that everybody's like, well, we missed that rally, so let's go over here and look over and see what we have. So you have a lot of what's called FOMO, where it's people that have close to $5 trillion sitting in money market funds have missed this rally. They simply have missed it because they believe the bearish narrative, which is very unfortunate for them because you're not going to see this for a while, unless the Fed straight up just crashes the economy. But they kind of miss this. So you're looking for a place to invest money. Well, you don't want to invest money in a thing that's up 100% year over year because that's a guaranteed money loser. So what you do is you find things around it and you put money there. Well, that's what this is. That's what's been happening here. So if you look at the portfolio, and we go back to the 15th, you can kind of put these two right on top of each other, and you can kind of get the general idea of what has happened here. So if I increase this, so BST, you see, has barely moved. That's the tech. BSTZ, so that's international tech. So people are saying, well, domestic tech is too expensive. I'm going to go to international tech. Now here's where you get into the big ones. Um, so you get different things like this. This hasn't moved actually that much. I thought it had moved more. O is actually down. AFB. So there's just, I don't know. It's like it's very different things. So this I would have to get a screenshot from the first to actually make it make more sense, which I believe I can do. Um, so it's just different stocks that are going from the first. There we go. That's a better screenshot. There we go. It's much more useful for you guys. So if we look here, if you can't tell, I'll do these videos on the fly. So now we can see. So BST is up by a little bit. BSTZ right here, International Tech. So the biggest one you see right here, SPHD was at 39 at the beginning of the month. And now you can see right here it's at 41. GABX, which I actually got rid of because this utilities are just rates are way too high. Utilities are just getting hammered, and mutual funds and ETFs that deal in utilities are having to do just different things that I'm not exactly comfortable with, as in more return of capital versus more dividends type things, which is, I'm not a fan of that type of financial engineering. So I got out of GABX after a long time. And then if you can see AFB, for example, went from 10. So at the beginning of the month, I was negative 5,430, but I've been piling money in, as you can see. So at 52, now I'm at almost 56. So you can get the general idea of where a majority of the gains came from. And so that's where that happened. And then also, if you look at here at the beginning of the month, I didn't have any money in a the money market fund. I found one that will allow me to buy in Louisiana because that was an issue I was having before with Morgan Stanley's for some reason. But I started putting money in this money market fund, and so there's that. So what else is going on, or what do I kind of predict? So if you go to the LEIs, leading economic indicators, they're still flashing recession. Now, could they be flashing recession because we came so sharply out of the COVID recession and now we're just kind of correcting? Maybe we might end up settling up here, but these are still flashing recession. So you have to watch these. That means the economy is actually very fragile. The Fed, Powell very clearly knows that the economy is on a cusp just by the way he's talking and how they talked about speed, and they're no longer talking about speed. Now they're talking about they think they're there, they're almost there. We're at the point where we don't. He's very carefully trying to talk the market out of doing cuts, but he's also trying to make sure that they don't do over tighten into a recession, which has happened a very large amount of times because that's what they seem to be really good at doing. So Powell sees this type of stuff. So these are multifamily units coming into the market. These are just big projects around you that are being built that you might not even know are there, but you see them, they're there, and they're being built. So you see this right here. There's one guy who did a bunch of research on Airbnb, and he found out that a lot of Airbnb units are not profitable in major cities. Some people are taking that to mean, well, they're going to dump all their Airbnb on the market. That's not what's going to happen. They're not stupid. They realize rates are 7%. What they're going to do is they're going to put for rent signs on the front of those Airbnb buildings. And they're going to start renting them out because they can't sell them. And that's one of the problems, is everybody's kind of stuck in place. So if you're trying to sell your house right now, you're probably finding it very hard, and there's very few listings. So what's going on is a lot of companies are building houses from the ground up. That's why the home builders are up. Um, with rates at 7%, it doesn't make any sense, but we went from 2% rates all the way up to 2% fixed rates up to now 7%. People are literally stuck. So your only option is to find a plot of land and plop a house down on top of it. So that's why the home builders are up. It's not a hard concept. This was a cool little graph that showed the United States recovery versus everybody else. If you want to take a guess what we did versus everybody else, it's not that hard. We threw a very large amount of stimulus at it, and we threw a very, very, very large amount of stimulus at it. And this is your result. Let's see. Just different charts that we have here. I don't even remember what this chart is. This was something. I don't know. Don't worry about that chart. But so that's kind of where we're at right now. That's another chart. That's the same thing. But I think so. This was the thing right here that pretty much proves the how many people are sitting in below 3% mortgages. Above 6% is up here. This tiny little bit. This tiny little bit. But a majority of the people are sitting in 3 to 4% mortgages. If they sell now, their only option is to either outright buy a house with cash, and pray you can do that, or take a 7% mortgage. What are you going to do? Most people are either going to take it, pray that they can refinance lower, or they're just going to wait it out and then chill at the house that they have. So that's where we're at right now. What am I expecting for July? It's pretty simple, actually. Um, so what am I expecting for July? I am expecting people to take profits. It is the end of the quarter. The market is running up until the month end. There's a good chance probably 100 points of this gets reversed because we're at very, very big time resistance right here. And unless the Fed comes out and says that they're not hiking in July, I don't see no reason why this market wouldn't sell off. Just for the simple fact that people want to take profits. Um, Thinking that the second half of the year might be a little bit more negative. Also, the 2 year has gone up a dramatic amount in the last, look, at the beginning of May, it was at 3.7%. Now it's at 4.8%. That's a lot of tightening in the system. You can look at the 10 year also. The 10 year is actually more important to the market than anything. So you could take a look at the 10 years. You can see how it's kind of traded flat. But right here, 3.39. Now we're sitting at 3.8. There are a very large amount of very smart people that think it's going up to around 4 or higher. Um, just because federal rate hikes are being priced out. The chances that we get a Fed rate hike in July are very high. Inflation's still not to their target. Core inflation and sticky inflation stuff is still not where it needs to be. It's down a dramatic amount. Um, PCE, consumer expenditure, was actually down this morning, but it's just not down enough to the point where they need it to be. So I don't see no reason why the market just wouldn't sell off just to take profits on, these ridiculous stocks. These right here, this group of stocks right here. Maybe not Walmart, but and definitely not Intel. Nobody cares about Intel. But just these top ones, Microsoft and Apple. I could see some of those people taking profits just for the simple fact of taking profits because they ran so much. Um, and then hopefully we consolidate into that 4,300, 4,500 range for a good bit of time, and then the market just stays there. So, like I said, my current plan, and this is something I was actually looking at, so this is what I'm doing for the future, is I know what my goal is. So this is the ultimate goal down here. So this is one of my goals. So this is my first goal to hit, or where I want to hit, is I have this consistently coming in every month. I know that AFB needs to be at 50,000. I also know that to hit that goal, this would need to be around 4,600 shares. So say if I change this to 4,600, you can see what that does. 50,000, 150 a month, bumps this up to 341. Now the reason why I'm focusing on AFB is because it's at a decade low. per one in stock price because that's what it does whenever the Fed raises rates. It is also, so if I go out to max, you can see what I'm looking at. So you see how it normally peaks around 15, goes back down, but it's been going for quite a while. So you can kind of see the trend here. And then during recessions or during downturns, it goes down into the 8s and the 10s. And then it goes back up and it settles into this little range right here. And the cheapest you're able to get it at is like 11. So right now, AFB is trading at a multi-decade low, or that a low that you haven't seen since 2008. When rates do start to get cut, AFB is going to go up. That's just how it works. Because people are going to go into munis because they still have yield plus they're tax free. Tax free is the next word. Every penny of this that I get every month is tax free. Now, if I buy this share at 1030 and I sell it at 1088, that's still capital gains tax. So just be careful about that. That applies to whatever tax bracket you're in. But the dividend, specifically the dividend that I get every single month, is completely tax free. So I have every incentive. Now it's going to make my portfolio look ridiculous. You know, it's going to be like 55% of it sitting in one stock. I don't really care because it's a municipal bond. So unless cities start going bankrupt that I don't know about, and the last time that happened, or even remotely happened during COVID, the Federal Reserve literally went in and bailed out municipal bonds when they said they weren't going to do it. They said they weren't going to do it for years, and then they ended up doing it. So I have every incentive in the world to just pile a large amount of money into AFB. It's a very cheap little stock, you know, a little ETF, like mutual fund thing going on here. And I can just pile money into it, and then every penny I get out of it is tax free. So what I want to do is I probably want to pile a very, very large amount of money into AFB, which is exactly what I've been doing. I don't know if I have the other screenshot, but that's pretty much what I've been doing. And that's what I'm going to continue to do. And then, so I'm going to have an outsized position in AFB. Just ignore that. You know, the portfolio is going to keep growing. So that's my current plan. Like I said, I think the market trades sideways, but I have incentives to add into SPHD, for example. I have incentives to add here, and I have very large incentives to add into this money market fund, especially if we're doing the higher for longer thing. So once the market starts to get high, you know, higher valued, I guess, or back up to new highs, that's when I'll probably start focusing on paying down debt. That's kind of like a thing that I do. And then we'll just go there. And like I said, dividend reinvesting's turned on. So these two stocks or these two ETFs up here, the tech ETFs, are going to pay $77 tonight. So that's an extra 77 on top of whatever's going on here, plus whatever money I make from you know, doing DoorDash or whatever. Just throw it in. So I'm trying to pile in as much cash as possible because, like, for example, in AFB chart, as I just showed you, when it goes back up to 12 eventually, it doesn't come back down lower than that unless we get back into like a recession. So I have every incentive now to bring down my cost per share on this, at least until it probably passes maybe, you know, like 11 or so, and then I can slow down on it. But and maybe start piling money into SPHD. But that's kind of where we're at. And then, you know, I always have this right here because this yield is about to definitely go up. So that is where we are right now. Leave a comment on, you know, whatever feedback you have, anything you think, and then we just kind of go from there. But like I said, I expect a little bit of selling or some selling in July just because people are going to take profits, and Apple's worth for $3 trillion. There's very large reasons to take profits right now. So there you go. Everybody have a nice day. Thank you.